incorporate into your trading. But for me, I've always kept it simple, just the 200 EMA specifically. And I might also include the 800 EMA. Those are the most, I don't want to say powerful, but I just want to say more effective than most of the other moving averages. Okay, so today, you guys know the moving averages, I'm sure. 200 as well as the 800 EMA. Don't need to go over that again. However, I'll just show you guys the use of it and how to basically structure your entire trading around the moving averages in terms of just trying to get it in line with the higher time frames as well as smaller time frames. Okay. All right. So now the moving averages help you essentially just to define the trend. Okay, so I won't go into the theoretical side of things. I'll just be showing you guys on the chart because we've already done that in the intermediate part. But the most powerful thing about it is what you call the pins to the EMAs. Okay, the pins to the EMA would be something along these lines. 200 EMA. Okay, the price would come in, run up, perhaps pin on the 4-hour time frame or the 1-hour time frame, and then just drop thereafter. Okay. Okay, guys, still with me? Okay, so now these are powerful because essentially what would happen is, in terms of commercial interest, which are the large major institutions, smart money as they are more commonly known, they use these moving averages as a way, because a lot of people will use these as support and resistance, and not only just people like institutions, because that's not really who they go for. They don't go for individual traders with $100 in their account. They go for mutual funds or hedge fund, and they use a lot of these systems where if a 200 EMA on the 4-hour is broken on the upside, and then this is a buy signal, so this would essentially then signify a buy, right? And also, in a lot of most times, if you're putting a stop loss, you might put it just above the previous support or resistance level. So if the EMA is acting as a support or resistance level, it only makes logical sense for the stops to go just above that 200 EMA. So that's why a lot of the times the market will play around these EMAs. It might bounce off here, come back, tap it, and then break it, and then come back and tap on this low here. And going back on the chart, you can pick any chart, you're going to see there's a lot of consistency in the way that the market moves around either the 200 EMA or even the 800. Like I said, I like the 200 more because it has a bit more signals on it, but I mean, any moving average will work. So we'll just take a couple of examples that occurred today and just try to understand a bit more about how the moving averages will work on the smaller time frames. Okay, so now this is the USD CHF. Okay, now I was expecting the market to rise up to these highs before breaking the low. I think this is a 96.97. I was expecting the market to rise up, break this high, and then just pin back down or just drop back down. Now, what had happened was around the whole moving average scenario. If you're looking at it on the 30-minute time frame, what this represented is the market broke above the 800 EMA as well as the 200 EMA, which really signifies a buy signal in most textbooks. Okay, so this was a buy signal, right? So you see that's evident on the 30-minute time frame. I'm not quite certain about the 15 minutes. Okay, the 15 minutes just broke above the 800 EMA. Okay, now if you go onto your 1 hour, this is the one that I actually liked. I didn't take the trade, but the setup was there. I was actually watching when it formed this. The market came in, broke above the 200 EMA. Now, what does that do? It induces longs on the upside. This is a breakout. Secondly, what it did, it came back, tapped this low, and confirmed the entry going long. And then gave us a nice pin bust sort of candle, because this is a push up until these highs, and then the market came back to close all the way back down here, and second candle boom, and then the market just dropped to the downside. All right, guys, with me. Okay. All right, so that was a solid signal, and it's really in line with what the market has been doing. Okay, but I'll touch on a couple of more examples which should help clarify this whole moving average scenario, because it's one of the key fundamental things that I do look at when I look at a trade setup. Yeah, now you're looking at the Euro CHF. I was expecting it to come to these highs over here, and for a specific reason, the market tapped this low. Okay, and you can see it spiked just below this low here, right, on the second leg of sort of like a turtle soup or W formation rather. And then the market shifted to the upside, consolidated, aggressive move to the downside, push up, and then again aggressive move to the downside, push up. Now, if we look at this at a closer level, okay, right, just so we don't get a bit confused, let me just use this one. I don't want to crowd the with the stop hunt boxes and stuff like that. So we'll just use this. Moving average. Let's insert our 200 EMA. Okay, the 200 moving average. Okay, guess what happened? Right, the market came in, consolidated, aggressive move to the downside, which is a stop hunt, and they broke the 200 EMA pin bar. Okay, now this is also a nice consolidation, which did signify buying from smart money. But for now, the main objective is to, obviously, this is the Asian range, aggressive move down, break below the 200 EMA, and then the market just rallied on up. Okay, so that was the Euro CHF in today's setup. Okay, guys are still with me. Okay, awesome stuff. All right, so I'm just having some troubles moving this thing out of the way here. Now, if you're looking at, let's take a look at I think it's the US dollar CAD. I think this was last week. I just want to remove all of this stuff. Okay, now these are the two moving averages that I essentially use. Now, if you're looking at this on the 30-minute time frame, you see a nice railroad track form on the 200 EMA, which is also a signal. But on the 15 minutes, okay, the market broke above. So the question might be, how do you know then if the market is still going to pull back inside? Now, the higher the time frame that the market, that you're actually looking at it, let's say you're looking on the 1 hour or the 4 hour or the daily time frame, obviously on those particular time frames, it will take more preference over the smaller time frames. So you might reference for an entry on the 15, or I mean on the 30 minutes, or on the 1 hour. Okay, so that's one of the criteria that I need. There needs to be some sort of a moving average, which is the 200 EMA. It needs to pin one of those moving averages. 200 EMA specific is more powerful, or is much more of a higher probability trade setup for me. So if I don't see it on the 15-minute, let's say I see a nice setup and I say, okay, here's a nice M formation, but I don't see the 200 EMA on the 15-minute time frame. If I jump to the 30-minute or the 1 hour or even the 4 hour and I still don't see it, that to me isn't a trade setup. Okay. Now, you don't need to incorporate the moving averages into every single thing that you do, because a lot of people like trading the reversals. Okay, but let me try and look at an example where the moving average didn't confirm. Okay, so on the smaller time frames, because if you're looking at this, this isn't exactly a pins to the 200 EMA, right? This is a break above the 200 EMA. The market consolidated right above it, and then it pulled back in. However, if you're looking at it on a 30-minute time frame, it gives you a much more different picture. Okay, so if you look at it on a 30-minute time frame, it still looks good on a 30-minute or on the 1 hour time frame. Then your trade setup can actually work, right? So because for me, I need some sort of confirmation with the EMAs. So if I don't get it on a 15-minute time frame, I'll probably just jump to the 30-minute or the 1 hour. And sometimes, but very rarely, I might look at the 4 hour time frame to get some sort of a signal. Okay. So if you're looking at this particular example, the market was rising, right? And all of a sudden it popped above 200 EMA on the 1 hour time frame. Now, if you drop that down to the 30-minute, I think I lost everything there. Okay, let me just try and highlight that. Let's see. Still the same. Okay. All right. Now, if you look on the 30-minute time frame, this does not look like a trade setup. This does not look like the 200 EMA actually held. It looked like it was actually broken. Now, if you look at the 15-minute time frame, it's even worse. But what's interesting is on the 15-minute, you saw the market came in and pinned the 200, the 800 EMA. Okay, because the 800 EMA on the 15-minute time frame is the 200 EMA on the 1 hour time frame. Okay. All right. So whenever you see a pins to the 200 on the H1 time frame, on the 15 minutes, it's pinning the 800 EMA. Okay. So if we look at one of this example over here, the market came in and then dropped aggressively, just touched the 800 EMA. So if we highlight this part, we should be able to see that the market came in and pinned on the 1 hour time frame the 200 EMA, right? So that's why the markets obviously do work hand in hand with each other in terms of the different time frames as well and moving averages, because the moving averages, the 200 is 4 times less than the 800 EMA. Okay, so looking at another example, I think this was yesterday or I'm sorry, not yesterday, Friday or Thursday, when the market came with an aggressive tap right above the 200 EMA. Now, if the trend direction is down and there's this sort of like base or consolidation back into, okay, this is where smart money was buying. If you did remember the supply and demand areas or order flow as we call it, areas, this is where you essentially want to get in on the minor level, so to speak. So when the market comes into those zones and you have the 200 EMA or the 800 EMA, now that's a higher probability trade setup than just having an aggressive move up and then an information. Okay, that really does mean nothing if it's not in the right context. If there's not buying or selling from smart money, then that means there's a very high probability that the trade won't work. Okay, so if you're looking at it now on the 30-minute time frame, the same trade setup, you might have been convinced that the market is edging higher, especially if you were looking at on the 15-minute time frame. Okay, only thing that would have saved you on this one, or would have convinced you of the short rather, that would have made you money, is the 800 EMA. Okay, you saw the 800 EMA, 8 and 50 and the 200 actually cross going down. I don't use it that way because I don't want you guys to actually look at it in that simple of a sense and say, okay, when the 200 crosses the 800 down, it's a sell, right? Because I know a lot of guys like to simplify things so much that they end up just I don't know, burning themselves. So in a way, there were a lot of things that actually set up in this particular trade. Right, you had your 200 EMAs that were there. You had a consolidation area which represented previous selling from smart money, which was a supply area, especially judging by the way that the market left that zone. And so logically, when it comes back again into that zone, the market should drop to the downside. Okay, guys, still with me? Okay, all right. Okay, so that's one application of the EMAs. Now, when you're looking at actual reversals, because sometimes you might get a higher time frame setup. Let's say instead of the 4 hour or the daily time frame, you might get a pins to the mail on the weekly time frame, which we just had on the USD CAD. Okay, on the dollar CAD, we just had the market come in, um, railroad track right on the 200 EMA. What does that really mean then? Okay, now if on the higher time frames, when you're looking at the charts, and obviously the trend has been upward moving, and it pulls back in, right, into one of these 200 EMAs, that really simply means that there was a lot of inducing to the downside on this one, especially with the close below the 200 EMA. A lot of people or a lot of traders specifically were expecting the market to drop to the downside, okay, on this one, whether they had stops aggregated around here or they just simply had some sort of a bias that if the market closes below this low, which is 24.56, they would be going short on this market. Okay, so I mean it's also in line with the previous trap volume area, 24.56, and therefore gives us a much higher probability that the market should continue then to the upside on this move. Okay, so that is how you'd essentially look at it on the larger time frames, whether it be a monthly, whether it be a weekly. I do believe on the Aussie dollar, we had something very, very similar. Okay, all right, so um, was it on the 4 hour? Okay, yes, on the 4 hour time frame. Now, if you couple this with your regular analysis of just looking at the Fibonacci's, okay, the Fibonacci level, you have your normal swing low, swing high. Usually reset will come in anywhere between 50 and 61.8. So if the market is looking to continue on the upward trend and not just reverse, you're looking at that. So in this example, on the 4 hour, you had this consolidation, which is a demand area. If you're looking at it on the daily time frame, it was much, much clearer. There was just one black candle going down, which would have been a red candle, which sucked in all the sells from retail traders and also some institutional sellers. And then the market just parabolic after that to the upside and just peaked at this high here. So when it came back into that liquidity pool, this is where smart money was looking to buy back again. So you already have an area that you know smart money was previously buying at. Secondly, you have the 200 EMA, the trend line was broken with an aggressive move to the downside and then shifted on upward. Okay, I won't talk about this now, probably in a later session, but this tap in just to reset things. There's a couple of ways to actually get in on this, but as I was expecting the market to continue rising, there was a bit of a pullback. I think it was on Friday or something like that. Yeah, I think it was. I'm not quite sure. I'll just double check with the drop to the smaller time frame. But as you can see, this is on the 4 hour time frame. Now, if this happens then and then the market shifts away, you already know that for the next couple of days at least, you should be going long on the US dollar CAD. Okay, dollar CAD you should be buying. And when we drop down to the 15 or 30-minute time frame, you'll be able to see particular trade setups, which also was visible today with this aggressive move, consolidation, pins once, not once, but twice. And if you look at the actual candle that formed the second leg, it just came in just below the first leg. Okay. Okay, excuse me guys, I'm a bit hungry today. Right, so if you're looking at the 15-minute time frame, you get a tap, and then second tap, clear out all the stops, flush those guys out, and then the market went straight up after that. Okay, not a huge move as you'd expect this type of setup to have, but I mean, you would have banked on this one, and I still do believe that we will have a bit more upside to this move, and we should be seeing the market just continue going upwards. Right. So, I mean, there was a number of trade setups that actually formed this on the I think for the past, I don't know, this is, I think on the Euro USD we have something similar. Okay, on the Euro USD, you see on the 30-minute time frame, it was quite visible, one pin to the 800 EMA, and then the market just left. Okay, now if you're looking at the 1 hour, you only had the market consolidate on the 200 EMA, break below, aggressive move to the downside, and then the market just rallied up. Okay, I was actually waiting for this trade setup, but didn't quite set up nicely, so I actually had to chase somewhere around here, but it ended up paying quite nicely, but I got out at 50 on this one, so I didn't catch this entire move. I wanted to get at least 100 on this, but I'm sure you guys get the picture now of, if you don't see it perhaps on the 15-minute, if the trade is saying, okay, consolidation is there, and the move to the downside to form the LOD is also there, but you don't find one of the moving averages in there, or you just need extra confirmation or additional confirmation, just check out those moving averages. You can pop to the 30 minutes, to the 1 hour as well. I don't like you guys to go to the 4 hour unless you actually analyze it. But for confirmation, if you have a pins to the Mayo or the pins to the 200 EMA, for me it doesn't matter. For me it doesn't matter whether it's 200 or it's 800, as long as it pins it, because that really adds another layer of or it increases the probability of the actual trade setup working. Okay, and then you can just ride the trade obviously for the entire what you call cycle or the ADR, or you can probably take it from that swing low, swing high point and just try to pinpoint from where the market came in, right? But I'll show you guys this on the fib once we get back to the fib. So this entire move up to 261 would have been our take profit level. Okay, so for me it doesn't really matter where, if it's a 200 EMA or if it's the 800 EMA. Now on the 50, I don't use the 50 EMA at all. Okay, so I don't really look for trade setups or just use it for confirmation. On the 1 hour, I would look at this, right? This would mean something to me. Also, this would mean something to me, provided it's just in line with the major trend. So, I mean, there's countless examples of what the market did. I think this was the GU on Friday. GU previous day's high came in, spiked right above. Okay, and with a good entry, you would have hit your limit of 50 on this one. Okay, so I've been looking at these spikes over here. So this is 1, 2, 3 hits at that low. So you don't want to really trade against it. So I've been expecting the pound to continue going up. And guess what? 800 EMA is in the way. Market came in, tapped the 800 EMA. This is on 4 hour. And the market should be rallying up to at least here, 38.2, and over here at 50. So that's where my take profits are on the swing trade on this one. Okay. So if you look at the daily, this is a daily, this is a 200 EMA on the daily, but on the 4-hour it's a 800 EMA, right? So it's a very neat trick to actually know, because it sort of like gives you added confidence in the trade setup itself, right? So you don't just have I don't know, that gray area, so to speak, because I mean, if you look at the Euro GBP, the Euro GBP has just been giving. I mean, you could have just traded this for the past 2 weeks and made money. Okay, look at the same thing. Aggressive move to the downside. Boom. This is the 800, by the way, on the 15-minute time frame. The market rose as well here. Market came in, aggressive move to the downside. Boom, hit this low over here. And if we drop down to the 15-minute time frame, just want to check on the upward trend, right? So if you're looking at the uptrend, today the market came in, railroad track, probably giving you a nice W formation, and it might have given you a bit of heat on this one. It's only 8 pips, but you guys can see the actual structure of this whole thing, right? Looking at it either on the 30-minute time frame, on the 30-minute it looks much better. It's just one pin. Market closes on the 30-minute, you in going long. Right, so whichever time frame that looks better, I like 30-minute guys. Okay, because it gives you much clearer signals, and it allows me to, I don't know, confirm on the fifth much better than the 15-minute time frame, because candles on the 15-minute can be kind of rushed. So you're looking at this, you're seeing the aggressive move down, market closes just below, the second candle pulls back in, you're in going long. All right, and of course around here, nice double tap, market broke up, went on up. So this one, market broke below but didn't come back above it. Right, even if you did take it, you probably would have been safe with a really good stop loss, because mine is usually like 50 pips or so. I don't give these guys anything. All right, any questions, guys? Okay, so essentially what I need from you guys from, I don't know, today going forward is to, you don't have to do it, but just try and incorporate these two moving averages into your trading. Okay, firstly by taking, let's say, 2 or 3 markets. Okay, all right, so I mean the EMAs you should have done with Menzi in the intermediate section, but I'll just quickly show you guys this before time finishes, because I just want to give you guys a couple of exercises that you. Right, so moving average. All right, I just use this indicate this shortcut over here, and then you just go to custom, and then you go to custom moving averages. Okay. All right, so you go to indicator list. Okay, still with me? Right, and then you go to custom moving averages. Just click OK, and then you input the period. So the 2 periods that you're going to be using is 200. So you type 200, you change it from simple to exponential, and you just click OK. All right, so there you have your 200 EMA. And then secondly, custom moving averages, and then 800 exponential. You just change color. You can use a dark blue, or it depends on the way you've changed color for your entire platform. I don't know where it went. Oh, it's down here. Okay, and there you have your 800. There you have your 200 EMA. right? Now, in most cases, if the 800 EMA is above the price, the market is in a sort of like a downward trending market move. And if the market crosses above the 800 EMA, it's usually going to go up into a sort of a rally. Okay. Right. So what I want you guys to do is let's try to take. I'm trying to think of any good examples. All right. Let's just take today's examples that we had on the Aussie dollar, US dollar, and just for me to actually show you guys what I need to do quickly before our time finishes. All right. So ideally, what we want is for us to be able to see this. Okay. So we're gonna highlight this either by a rectangle or whatever else you can use to actually highlight it, and then we're just sort of gonna label the EMA that it touched. Okay, so if you touch the 200 EMA, we're gonna call it the 200 EMA bounce. Okay, the 200 bounce. Okay, and also the time frame that it occurred on. So if it occurred on the 15 minutes, okay, just type in there 15M. Now, there's also a number of other factors that could have influenced your decision on this, like the consolidation, aggressive move, break below it. But what you want to do is just focus on the moving averages for now. And if you have these two set up, you just find as many as you can based on one currency pair, and then you just scroll back. Right, here's another one. You had a nice pins to the EMA on the 15-minute time frame, and then you go in, draw a rectangle on that one. So you're just looking for the ones that actually worked out. Right, I don't need to really do a lot of analysis on it. Just try to find, like, at first sight, if it's a 200 or if it's an 800 EMA bounce, you're going to label 800 EMA bounce. We also had high of the day here, and high of the day was broken with the second leg. And previous day as well, 200 EMA bounce along with 800 EMA bounce. You can call that double signal or something like that. Right. So just label all of that on one currency pair, and then you go on to your 30-minute time frame. Right. So you look at your 30-minute time frame, you look at all the instances where the market respected the moving averages. Right. So when the market respected the moving averages, bounced off it, off the high or off the low, you just highlight that, and then you take a screenshot of it, or you just save the image. Right. So I'm not sure you guys should know how to save the images, but if you don't, right click, save as picture, and then click on active chart as is, uncheck post image online, and just click OK. It's just going to ask you where you want to save the picture and stuff like that. So you just click on that, and then it should be saved up there. Okay, everybody's with me. Okay, so looking forward to the Euro JPY and CHF JPY. I was actually waiting for this one going long. I wanted to go long somewhere around here. Is it here? Yeah, I think somewhere around here. Ended up missing it, but anyway, the dollar yen. Okay, hopefully dollar yen will hold up this level, and we should see a bit of a rise up to 110 to a $1.10 level. But see how the market pans out. Right, so if you guys don't have any other questions, I did send out videos for the guys who asked for them on the advanced session. Not sure if you didn't get it, or if I didn't send those to you, just drop me a WhatsApp or just drop me a Telegram message again. Just say what you want me to send to you, because I do believe I sent everyone the videos. But just in case I missed you, just let me know. Yeah. All right then. That's good. All right. Awesome, guys. Glad you enjoyed it. I got some more trading plans. Hopefully, when I get through all of them, because I took a look at two trading plans, and I'll just browse through them, and we'll include them in our next session, probably on Wednesday. We'll have a session, and then I'll just go over some of them. I won't put any names and stuff on it, so don't be afraid to submit this stuff. All right. Cheers, guys.